Welcome back to Property Matters here on Dublin South FM with myself, Carol Tallon. You can contact us on social media at iPropertyRadio or email hello@iPropertyRadio.com. We're now joined by Markus Povari, founder and CEO of HYPERIN. HYPERIN is a retail tech platform, and I have to say I came across Markus when we were delivering proptech talks somewhere in Eastern Europe. We think it was in Latvia, and going back 2 years. Markus, as mentioned to you before we came on air, I was blown away by a presentation you gave looking at one particular project in Asia. But before we get into that, you're very welcome to the show, and you might just tell us a little bit about HYPERIN.
Oh, thank you so much for having me, Carol. I'm glad to be here. So HYPERIN is the mall management platform for retail real estate. So we offer all the tools that you need in order to run your shopping centers on an everyday basis. And the company has been growing well. We're very strong here in Europe and also have active users, over 200 shopping malls in Asia and Europe, and also have representation in North America and Middle East. So we are growing. And I'm also happy to tell you some of the insights of the industry right now. Companies we're seeing a lot of in Europe recovering from the COVID from 2020, and just glad to be here and finally seeing some physical meetings already happening in the industry.
Yeah, look, we're getting back to it, and hopefully soon we'll be back to doing our speaking on the circuits, and I'll run into you somewhere, whether it's in Europe or Asia. We'll run into each other again soon, which I hope.
Right.
So you mentioned there in terms of the company, so you've got a nice foothold there. Your headquarters is in Finland, but you've got a nice foothold across the Middle East and North America. The company's only established since 2008, so you've had great traction. A lot of what we're going to talk about, maybe will be dictated a little bit by COVID, but actually retail was one of the sectors of real estate that was massively impacted. And in fact, it was one of the first areas where the need for proptech was recognized. So you might just take us back to some of the early days. How did you get into retail tech?
Well, that's an excellent question, actually, going back to the memory lane. When we started in 2008, shopping centers were mostly built as long hallways, and you had the actual shopping center offices in the basement level. So there was sometimes even no internet connectivity at the time. So it was actually very challenging to provide these tenant engagement services or even simple tools for sales reporting, which is one of the most popular features that we have on our platform. And nowadays, of course, you have the large mobile phone displays with 5G internet connections, so you can have all the services available through mobile internet apps. And it's a totally different game. But back then, it used to be all about location. And due to the COVID, it's more about the technology.
Yeah, I think that's a really interesting transition. And, it's so funny because COVID has dominated so much of the real estate response and technology, and it's been attributed to really driving technology across construction and property management. But the reality is, retail was a point of concern for almost a decade before COVID hit. So you might just, because you have the benefit of such extensive global experience, you might just talk to us, say, I mentioned there that I'd heard you present on one particular case study. I think that was based in, was that Singapore?
I think it was Hong Kong when we talked about that case in PropTech event where we met last time, and we did a project for the Mass Transportation Corporation in Hong Kong, the MTR. So if you ever, or the listeners have been ever in Hong Kong, they know the subway system there, because it's kind of the standard default service that you need to use to go anywhere on the island. Or the mainland. So we did them a footfall analytics / mobile loyalty application. So actually MTR as a corporation, they're not just the world's leading mass transportation service provider, they're also a major landlord in Hong Kong greater area. So they have capitalize their subways and bus stations by building retail areas on top of them. So when customers are entering or exiting their mass transportation services, they need to actually go through the retail area. So those customers are converted into shoppers. And when we addressed the MTR for the first time, they just wanted to have a very simple mobile loyalty applications where they can actually reward their consumers by spending time in the mass transportation system or in the retail area. And they wanted to also have anonymously track and data statistics from those users, that they know actually how they spend their time in the retail area and what products and services they are browsing, so they can better offer their tenant mix for this particular segments of certain age and certain gender, and improve the services overall. And at the same time, they are able to offer indoor navigation with beautiful 3D maps, and nowadays even actually augmented reality based maps and these wearable technology devices such as Apple Watches. So the technology is really evolving there fast. As in Asia, you need to be very, very top of the game, offer these different consumer experiences, and the shopping malls, as you know, they are huge and offer these kind of different lifestyle experiences and destinations. So it's very competitive market right there.
Yeah, you touched on a couple of really important points there that I want to maybe explore. So one of them is, you refer to the term mobile loyalty. So it's, one of the early iterations of this we saw maybe, a decade and a half ago might have been when you were within range of a shop, you might get a text message. And then we ran into privacy issues. So you've absolutely address that technology has moved on, and it's much more sophisticated now, but actually so too are our privacy laws and expectation. So how does this, I know you mentioned anonymized data, but how does this sit globally kind of with privacy and changing privacy expectations?
Well, that's a very good point. Again, the privacy is the utmost important thing in this business, and as we are living in the European Union, we have the most strict privacy regulations in the world, and the world is not that much different in Hong Kong or Singapore. You still have those kind of cookie texts and end user license agreements that you need to accept and sign, and nobody actually reads them very correctly, but big companies like Facebook still do what they do about collecting consumer information. But the real trick is to do it in an customer friendly way, so it doesn't kind of annoy the consumer user experience, but at the same time you need to provide the customer the privacy they need, and also make them understand what kind of consent they are giving to your service. So that is the most important thing right now, that we need to innovate these new kind of services, but we need to make sure that they are give the right privacy to customers based on their consent, and also don't mix the customer user experience that much with these kind of legal text and cookie policies. So kind of make them more user friendly ways, I think the key, and that's certainly the goal that we are aiming for.
Yeah, and look, and to be fair, there is a fine balance there, and we know that people are particularly aware of their rights under data privacy. And obviously, as you point out, the EU has the single strictest data policies in terms of personal privacy. However, we do know, for example, North America, states across North America are very much looking to Europe to establish what best practice is likely to be. So it's not a case that we're overshooting. It's a case that maybe other jurisdictions will likely rise up to meet us. In terms of the analytics, you mentioned there the quality of the analytics, the range, they've certainly evolved in line with technologies, and including wayfinding. It's very exciting if you can bring in immersive technologies to follow with that. But one of the things I'm really interested in is how to make a compelling case for shopping center operators or commercial property operators. Try to make the commercial case. So you've mentioned previously that actually the result of this can be exploring new revenue sources, which is critical for retail at the moment. Can you go into some detail about maybe how the right interpretation of data and understanding that, and the right interrogation of that data can actually open up new data sources? New revenue sources.
Yeah. Well, those are kind of something that can be obtained through the big data or even footfall analytics. So I just give you a short example. For example, the case in Hong Kong, which we talked previously. So while the MTR gives these rewards to their consumers, allowing them to give their consent for the anonymized data, so they can build a data picture with, for example, floor map and heat maps on top of them from their facilities or properties, and then they can see where people are going, and if there's, for example, a lot of high traffic in certain floors, but they can also check from our platform the sales reporting from these tenant shops, and they can see a lot of traffic, but there's no tenant sales. So there might be a problem with the tenant mix. So the commercial management can do evasive actions based on the real-time data, and also on top of those data models. You can also have the specialty leasing sales, meaning the advertisement sales and e-commerce features are available in through our products and services. So based on the browsing data coming from various sources, such as the mobile loyalty applications or even Google Analytics, you can actually find out what kind of products and services your consumers are looking from your properties, and then you can actually offer better services to address those important customer segments by offering, for example, specialty leasing promotional places for certain companies to have physical appearances on the floor areas, or then you can also invest on the click and collect points, or even in the e-commerce side. But the bottom line is that you need to know your consumers. So I see many companies asking for us right now are, how do we get the big data? And the question I always answer is that what do you want to achieve with the big data? So do you want to know your customers better, or do you want to go to the e-commerce side, or as many these projects that the physical retail wants to transform into e-commerce don't work because they try to offer the same kind of products and services that they're not selling well right now online, which is not happening as the competition is online even 100 times harder than in the physical side. So connecting the physical and digital retail real estate in a smart way is what we are actually offering to our customers, to know their consumers, to know their target audience first, and then takes these first steps in order to boost up the commercial management or e-commerce or specialty leasing sales. So with specialty leasing and advertisement sales platform, customers can even achieve a 10% annual revenue growth coming from non-rental sources, making a really good way to recover from those losses from 2020 in certain tenant areas.
Actually, that's a really interesting one. So we might just go a little bit deeper on that. I mean, you make a very good point in terms of, marrying the online or the e-commerce along with the brand's physical presence, and that there is a lot more competition online to get eyes on the brand. However, offline within the shopping center or on the main shopping area, there's a premium to be paid for that, an exceptionally high cost, much higher arguably than online, even with very expensive platforms and maximizing digital reach. You're still paying a massive premium to be in a bricks and mortar store. How are your clients, how have they fared over the past 18 to 20 months of COVID?
I think the situation is a bit different in Europe or in Asia North America, Middle East, every market is kind of opening a little bit differently. In China, in Hong Kong, Singapore, the Chinese tourists are still missing from the luxury malls. So in Asia, many customers are looking actually to have more efficient management solution just for this everyday management. As the salary level there is not so high, they had no problems before just hiring new people to run the shopping malls with emails and phone calls and spreadsheets, the normal management process. But now they're looking for kind of the more management software solutions such as HYPERIN to make the management more efficient and let the actual management people to manage the company instead of doing this manual reporting in the shopping centers. And in Europe, mostly companies are looking to recover from 2020 revenue wise. So a lot of these specialty leasing, online sales, e-commerce projects. So every market seems to be recovering a little bit same, but the good news is that in all markets, the people are slowly returning to the physical retail, brick and mortar, as the revenue of the traditional retailers are actually growing, even in the United States, which has been a kind of a decreasing market through the e-commerce and Amazon and the big companies taking over, especially during the COVID times. But now I think what I'm seeing and hearing is that people want to go out and they want to have these lifestyle destinations and they want to meet people. So as you know, people are physical animals. They need to meet together and have a time outside the home for a while. So I think it's going to be a positive turn after all.
Yeah, there's so much in what you've said there. The reality is, you touched on the growth of Amazon and other e-commerce retailers like that. Just today in Ireland, we had a report issued that the logistics and the industrial side of our commercial real estate is at a 20-year low in terms of vacancy. So as in, we've got the best occupancy across logistics and warehousing that we've had over the past 2 decades. However, retail is still feeling very much like it's in flux. So we've had a situation here in Ireland where we still haven't resolved what's going to happen between retailers that were closed down or restricted over the past year and a half, almost 2 years, in terms of rates, rents. They have run into arrears. We've got cases going through the commercial courts, and obviously, as you would expect to hear in such cases like that, the retailers are reporting exceptionally low turnovers in these previously considered prime locations. And it feels like this isn't a new struggle because of COVID. This feels like a trend that was building. And, one of the things that I'm really interested in what you're doing is that you're helping the retailers to create a more experiential model. And I think we've known for the past definitely 6 or 7 years that this is the way retailers need to go. But is it a resistance that they're not getting there? It hasn't happened yet. The transition hasn't happened. And for all of our talk about technology, you mentioned there that in terms of the objective of the insights, it's to know your customer. And I feel like if somebody was to open a shop 100 years ago, they would have been given the advice, know your customers. So actually, the core of retail hasn't changed at all. Just what we need to know about people has become so much more sophisticated. So
exactly.
What are what's next? That's a big question, but I'm taking advantage of the fact that you have this global experience that you can see trends that are far ahead of Ireland and the UK. So is it a fair question to ask you, like, what's next in terms of retail trends?
Well, that's a kind of $1 million question. So I wish we could know, but what we are seeing right now is the kind of the new era after COVID. So few of the retail real estate developers are definitely moving into this hybrid model of serving both e-commerce and physical customers. and I think that's the right approach to move on, just to have those click and collect points ready, because you never know what the next COVID might hit you. So in a way, moving into this hybrid model, I think is the right way to go, but still the brick and mortar has its advantages, that the physical appearance, the lifestyle destinations, the restaurants, the entertainment, not just the retail side, but at the same time, the retail mix needs to be very competitive. So I think the retailers themselves need to adapt to this new normal and offer the kind of products and services that you wouldn't necessarily can experience or get online very fast. We're also seeing this worldwide logistics challenges. So especially the Christmas market is coming. I think you might be more easier to get your Christmas gifts this year from the actual brick and mortar stores instead of ordering online. So there's a lot of different scenarios here, the climate crisis, the energy crisis. So it all comes down together to address this question: where are we heading? And I think the technology has been there, like with HYPERIN, to go into different sectors to better serve and know your consumers. But I guess at the end of the day, the consumers will do the decision how they want to visit the retailers in the future, whether it's a virtual hybrid model or the physical traditional model. But I think, and according to all of the kind of industry analytics, is going to be a kind of a mixed model.
Yeah, we hear the term new normal a lot, but I think it is more a case of the next normal, the next iteration of retail. And that was a big question to ask you. But my final question is, hopefully not such a big one, but what's next for HYPERIN?
Well, we are growing with customer revenues right now, and actually that's a good point to announce that we already have been looking to publicly offer the company to outside shareholders as an initial public offering, most likely to be conducted by the end of the year 2025 in Helsinki, Finland, Nasdaq OMX stock exchange in the first North markets. So that's going to be the next goal for us as a company, and in between, of course, we are improving our retail real estate developer customers worldwide to better adjust to the new normal and to increase their commercial management efficiency and their sales and consumer knowledge. So that's, I guess, the big picture of what's happening in HYPERIN.
That's a big picture. It's also big ambition, which we love to hear. So thank you so much for sharing that with us. We'll definitely check in with you on the way. Have to ask, because you're in the rounds of thinking about an initial public offering, did you consider the SPAC route, which has been so popular across proptech startups over the past 2 years?
Well, we had some experience in our previous companies and success. So we have been kind of bootstrapping our way, growing with customer revenues, having few investors to back us up in the beginning. So we have been kind of, the company is now very self-efficient and is managing itself very well with our advisory board and with the current investors. So in a way, we kind of wanted to have a little bit different route than growing with investor money, because we wanted to kind of be there for our early adopters and also grow as they are growing in terms of retail real estate. So it's been a kind of hard work for us, but it's starting to slowly pay off.
That's what we love to hear. Thank you so much. That was Markus Povari, founder and CEO of HYPERIN. And
thank you, Carol.
Thank you. And that's it from us this week. Thank you for listening in to Property Matters on Dublin South FM. You can get in touch with the show on social media at iPropertyRadio or email hello@iPropertyRadio.com. Also, my thanks to Peter Rice on sound. We're back at the same time next week From myself, Carol Tallon, and all the team here, stay safe.